You never like completely lose it all.
No, you still have the strength. You just don't look it.
Yeah, it's like buried under there. It's like a permafrost.
Like old man energy is real.
No, that old man strength is real. I've seen so many videos of these like old men from like World War II doing like push-up competitions with like bodybuilders, and they just wipe the floor with them. There is something to that old man strength.
Amit, you are a legend.
Yeah, Amit, bro. I actually was watching a little bit today.
Congratulations.
It was fun. It was a good stream.
Congratulations. Take a victory lap. You've earned it. You had like, what did you have?
He had 2,000 more people than the official.
You had 5 times more people than freaking Palantir Live?
They had 3,000. He had 5,000 people.
Dude, it's weird. I got shout out to Brad, stock market nerd. He DM'd me about like this exact thing Kelly was talking about. There's a bunch of people that were just telling me about it. Like, it does feel good, but I just feel like content is so fleeting that you stop posting and then that means nothing. So you really just have to keep going. So like it felt really good, but it's like, what's the next video? What's the next stream? Got to keep it moving because, you know, this is a competitive game. You know?
But it's also compounding. You can't, you know.
It does. That's why you get 5,000.
Yeah, you can stop and feel good about it. You know what it is? The thing is, people tuned in to see your reaction to the news.
Yeah.
You have to understand that too. Like they could have gotten the information from the channel, but they wanted to experience that with you. So that's good. That means that people are invested in you as a community.
It was a community. It was a real community that really got together, and the chat was going crazy. I mean, you know, stocks up 20% after hours. You're going to have a lot of people that are excited. So
20% is like that's like the new normal now, right?
It's the new normal. Meta, Palantir,
everyone's got 20% or it didn't count. Yeah. Even measly 10%, 7% after hours.
Okay, before we'll talk about Palantir, NVIDIA, Tesla. I think Chris will be here tonight. We'll see if he makes it. But I want to do this test live. This is my 4th Celsius. The first 3 have been disgusting. This is watermelon. Okay, we're gonna do a test of watermelon. I don't have high hopes, but here we go. Let's see.
Before you do this, are you a shareholder?
No, not yet.
Okay.
I'm probably gonna invest a little bit because the growth is phenomenal, but the product is I just can't. All right, here we go. Watermelon. Yeah, it's disgusting, dude.
When you say disgusting, describe it. Use like 5 adjectives.
It's carbonated flavored water.
Okay.
I don't taste the energy. Like when you have a Red Bull, you can like feel it in your esophagus.
Hold the label up. Hold the label up. Let's see what is in there that's getting you amped up. Let's see.
It has 200 milligrams of caffeine.
Make yourself big. All right.
Be careful now. Can you do me a favor? Just go to Starbucks, get a coffee so I can get my dividends.
The caffeine's going to get you pumped. What's the sugar content?
It's zero sugar.
No sugar. Okay. What are they using to make it? Does it taste sweet at all?
It's sweet, but it's like, why do I want watermelon water? Like that's carbonate. It's just, I don't know, dude. And like I look like a gym guy today. All the people at the gym are drinking this, and I'm like, how is it? It's just it's a spiked Gatorade. That's what it is. It's a spiked up Gatorade. That's all it is.
I gotta check it out because I do see them at the gym. I posted those pictures. I saw 2 of them cans crushed on the floor. But is it an acquired taste? Like the first time I tasted vitamin water, it was disgusting. It tasted really diluted. But then after a while, you like, you get used to it, and then you start to like it, and then you start to crave it.
Did you think vitamin water felt a little chalky?
No.
No.
I just felt that it felt diluted. It's like when my daughter asks for, a juice or something, I'll put half of the container is the juice, and then I'll dilute it with water so that she's not drinking, pure sugar. And that's what it tasted like to me. It tasted like it was once a good drink that was diluted.
Okay.
Yeah, let's just get into it because we all want to talk about it.
So let me pull it up. Palantir crushed earnings. Pretty good call. I'll be on live after this on my own channel for about an hour, probably at like 10:15 to 11:15, just breaking down my thoughts. But they did good. U.S. commercial growing 70% year over year. Customer count growing 35% year over year. They closed 103 deals worth $1 million. The company's going to grow 20% next year, which is above that 17% range. Stock hit $20 after hours. 160 million shares traded. Earnings call smashed. I mean, Karp just absolutely put the hammer on all these analysts that don't know how to analyze the company. And adjusted income margins. This was the big thing. It went from 29 to fucking 4. To increase that adjusted operating income margin 5% in 1 quarter. I mean, I had people who were really big Palantir bears texting me saying, dude, I'm buying back in. And these are smart people that sold out of it when it was theoretically overvalued at 15, 16 bucks. They're back in at 18, 19 because now the growth is there. So let's start with you, Steve. What were your thoughts on these earnings?
What a difference a year and a half makes. What a freaking difference.
Yeah.
Oh my God. This was nothing short of spectacular. I'm so pumped up for these. I am buying more, and I'm considering what to get out of to add.
Same.
Like if this pulls back for some stupid reason, something's getting sold. I'm not going to say what it is, but
we both know. After earnings, we both know what we're selling for this one.
Something I don't want to sell could get sold. Let's just say that.
Yeah.
Like I may have to buy back my covered calls I wrote.
Okay, what did you think was the most impressive thing about this quarter, I guess?
Probably what either people missed or didn't look at, the free cash flow.
Okay, can you explain that?
Like stop and no adjusted, like straight free cash flow and their deals. Let me share because I updated all the charts for you in the past 20 minutes. So I will be doing the deep dive on Seeking Alpha. It'll probably come out Friday, but this is a sneak peek at all. Some of the charts they'll be in there.
KRIS is not the friend who sent me that text. So I wish it was KRIS, but it was not KRIS. Go ahead.
I wouldn't be surprised if KRIS gets back in.
KRIS already said on Twitter he's not buying back in.
I wouldn't be surprised if he gets back in.
I think on principle he's not going to get back in.
He's a capitalist. I wouldn't be surprised.
That's true. He's a capitalist.
This thing, and you got to put it in context with what Karp said. I wish we could play that clip from the first 2 minutes when he was speaking. Because he completely said, nobody can do what we do. You put your best people, and I'm paraphrasing, you put your best people that have been working on your AI and everything else, and we'll do in 10 hours what you did in 10 months. I mean, that's what you want to hear from a CEO. And he was not reserved about it. He's coming after everybody. I love it. And I've been saying that this could have a Salesforce arc. I think it's going to. So revenue keeps going up. The free cash flow, and I don't like the adjusted because they put back in, just give us straight free cash flow numbers. Enough with the adjusted stuff. You're a big enough company, you don't need it. That's a pet peeve of mine.
What are they adjusting for?
Amit, do you know? Because I don't remember.
What do you mean, what are they adjusting?
They're not putting SBC back in. They're putting, I think they're putting what they're spending on property and plant back in for some reason. But I could be wrong.
I got to go through the real numbers to figure that out.
296 million in free cash flow this quarter. I mean, they operated this quarter at a 48.71% free cash flow margin. I mean, that's incredible. Super high margin business. Share-based compensation ticked up just a little bit, but compared to how much revenue jumped quarter over quarter,
they decreased it 18% year over year. 478 million versus 555. They decreased it.
I am fine with them giving out a little bit more shares when they hit numbers. And I've always said that if your sales team is going to deliver and you have all these deals in the pipeline, I'm good with it, especially since they have no debt and 3.6 billion in cash.
3.7, dude. I don't know where the fuck they got $400 million to add to cash. But also, shout out to anyone who has those 2025 $15 calls because
let's go on that.
Closer to 25. So those calls are gonna fucking print if you have them.
They're gonna print.
Now don't buy them tomorrow because they're gonna be expensive. But if you had them for the past couple of months, they're gonna do good. Go ahead.
So and here's where I'm gonna go after people because I've earned the right because I've consistently went out there and said it for the past 2 or 3 years. Palantir's not a black box.
Yep.
They continuously prove they're not a black box, and I want to see how many people say tomorrow they're a black box, blah, blah, blah. They're not, okay? They are very straightforward with what they do with the government as much as they can be. We all know that they work with the government. It's the commercial growth that is driving this. And when you look at the yellow bar for total customer count, and then you look at the blue bar for commercial, you go back to Q1 2021, everybody was concerned about commercial growth. They're just a black box. They're CIA, PSYOP, blah, 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 blah. Can they grow on commercial side? Yes. They absolutely can. They are crushing it. All of the biggest companies are using them. They did not say exactly who these big deals
Dude,
were.
they said they got 3 $25 million deals with a biotech, a telecommunications, an auto renter, retail, some auto.
Yeah, so the communication company, it's either AT&T, Verizon, or T-Mobile. I mean, we know that from what Karp pretty much said.
Yeah.
Biotech could be, I mean, any one is 6 to 10 of them.
They're working with Novartis, which is the 4th largest pharmaceutical. That could be one of the deals.
Yeah, I mean, this is just crazy. Over 100 deals. Like, really think about that. In the past 3 months, they closed more than 100 deals of over $1 million. Like, put that into perspective. This is not slowing down. 5 million deals around 30. $10 million deals around, what was it, 16, 17, and then 3 at 25 million plus. Like, this is crazy growth. They continuously prove the bears wrong. That person who didn't even look into the company that you debated, you shouldn't have even given them the time of day. The fact that they didn't know when LLM was, get out of here, ridiculous. But here's the big thing. Revenue and free cash flow. So I think they're sandbagging. So I put in the 2024 guidance $1 billion because that's their high end. I think they're sandbagging. But when you look at, and I have them against Amazon, Datadog, Snowflake, Tesla, Cloudflare, MongoDB, Palantir, and granted, some of these companies have not reported yet. They're trading at a cheaper price to free cash flow than Amazon right now. I mean, for them to be trading around 52 times free cash flow, they were around 84, 85, if I remember correctly, last quarter. And on a forward, let's split the difference. They said between 800 to $1 billion. Let's split the difference and change this number to 900. I need 2 more zeros. I can't count. They come in with 900 million free cash flow next year. They're trading at a forward free cash flow, price to free cash flow of 40 times. And that's in the middle of their range.
Right. That's exactly
This company is not that expensive anymore. And you're paying for the growth. And think about this. At this rate, there's no reason this company can't be generating 3 to 5 billion annualized free cash flow.
Why? Break that down for
3 to 5 years.
Why do you think that could happen?
Why do I think that can happen?
Why do you think they can get 3 to 5 billion in free cash flow in the next couple of years?
AIP is going to be huge. Like, they are not even truly monetizing this yet. More and more customers are going to come up on this. They're going to continue to grow their customer count. I just think that they are going to be, and I can't stress this enough, the second most important software company over the next decade behind Microsoft. I think I've said that every quarter. This quarter could not be more clear when you think about the people or the companies in AIPCon 1 and then AIPCon 2, and then the NIH deal, all the deals that they're getting, and everybody's saying that Palantir has revolutionized what we do. I mean, this isn't individuals on Twitter. It's not me. It's not you. It's not analysts. These are the biggest companies in the world, from Cisco to the hospital systems, Tampa, Cleveland Clinic. I mean, you got to, at some point, say this company's legit. And this is, all the FUD out there is exactly what it is, FUD, because the numbers don't lie. And this was a blowout quarter. And you got to love Karp coming out and saying, what did he say? This was a behemoth? What did he say?
He said it was bombastic. And
bombastic. That's going to be the title if they let me use it. Bombastic quarter.
Dude, if Seeking Alpha doesn't let you use the word bombastic, that's some issues, dude.
That's gonna be the title.
I think Karp also had this, like, it's an arrogance that was justified with numbers this time. It wasn't just him being cocky to be cocky. It was just like him saying, look at the numbers. Like, you can't not let me be cocky right now. Like, I put up the fucking numbers, dude. And they're going to keep putting it up. This shit's not slowing down.
He could have slammed his fist on a table this quarter, and I would have not said anything.
Yeah. It was good.
Carlos,
are
you a believer now? Like, can we get you on the Palantir train?
I was never a non-believer. I was concerned with a majority of the money I was concerned with the beginnings of the company and the majority of their business coming from the government, right? And even back when we first started talking about this, it was like, no, this is going to be adopted commercially. It's going to be adopted commercially. And now we've got enough runway that we've seen that they've actually executed on that. And so now you see that the government contracts are actually a really small percentage of what they're doing now. And I think this quarter proves something like a big part of the thesis from a few years ago, that once enough of these companies start using it and it starts to affect their bottom lines, that there'll be a cost of not doing business with them. And with this being the year of AI, and how they are basically synonymous with AI, when you hear a lot of the pundits and the analysts talking about them, they're set to benefit from that. And I also believe that due to their government ties, this is a company that is impossible to fail. They are part of how we defend this country, meaning they will be in business forever. It was just a question of whether or not they were going to sit on that, or if they were actually going to expand the commercial and try to become greater than that and not just be complacent. And you're seeing the signs. I mean, I'm reading the results now. They are doing everything that the believers believe. I think I even posted that as a response to you on Twitter, AMIT. A lot of people believe in this company, and it's great. I'm happy for you guys. This is it's a great moment when a company that you believed in for so long actually starts to achieve the things that you felt. You have this sense of it's fucking happening. So I think S&P inclusion is still not too far off, and once that happens and people have to hold the shares, this company could grow very much like you outlined before.
All right, Chris, you buying back in or no?
No.
Okay, why?
What?
Why? I told you, Steve. He's not buying back in.
No. Listen, you want to bet? You want to overpay for this company? Go.
Oh, why are you overpaying? Why are we overpaying? Why is it overpaying?
2 questions. Question 1: is there a price that you would get back in at? And question 2:
$6.
12.
Okay. If I buy you shares, will you hold them?
What do you mean you'll buy me shares? I'm not gonna. No. I don't want you to buy me shares. Nope.
Okay, so why not 16, 17? Why is that not because I'll buy at 16, 17 now, given these numbers. Why is that a bad decision for me and Steve to buy at that price, or 18 or 19 or whatever?
Because y'all ain't doing the math.
Okay, so break down the math.
Simple enough. Okay, so the math is so much of their income, their operating income, is actually coming from their cash pile, which they're basically generating net interest income on, right? Because they have short-term treasuries.
I think
next year,
30% of their income.
Right.
Okay.
Which is a huge amount, right? At the same time, they're still diluting shareholders. So if they weren't diluting shareholders and they were actually using the money to buy back shares and not letting the share count go higher, right? That would mean that they would be spending money using their cash flow towards buybacks, right? So to keep their either their buyback shares or they pay their employees higher in cash compensation. So the accounting gimmick that they're doing right now to show like all this additional growth, it's not going to be around forever. They're going to have to generate real tangible revenue.
Wait, it's not going to be down because rates are going to drop, right?
Right. Which
but
means
if rates drop, shouldn't they do better as a company? Like, shouldn't it be easier to sell the software and the environment gets better?
To some degree, yes. But more importantly, they're going to have to be replacing a lot of that income. Look at how much income they generated from their short-term investments over the last year. It is a staggering amount, which means that now they have to replace that. Sorry, go ahead.
In short-term duration bonds that they're generating significant income from. But as far as dilution, it's down year over year in Q4. They finished last year at SBC as a percentage of revenue at 25.44%. Now it's 21.8%. And
because your top line grew, right?
The spread between, and I'm okay as a shareholder being diluted. It's the same thing as what happened with Tesla. I'd rather them do that than tap the debt markets. And we're seeing the growth. Now, at some point, I want to see that SBC come down to 15% or so. But I'm fine for the next couple of quarters. It being in the 18 to 22% range.
And on top of that, growth is actually, if you think it up, if you look at the growth, it's not doing exceptionally well. Yes, that whole US customer revenue like is up 77%. That was nice to look at, but overall their revenue is not growing more than 20%. So I'm not going to give it a premium valuation. I'm sorry, just not happening. There's companies out there that are in way better position to capture that additional growth. There's no reason why someone should be paying how many billions of dollars? 50 billion?
Oh, no. They're good.
36.
36.
Right?
No. 36 now, but what is it after
42.
After this 20%?
42.
So at $20, how much shares outstanding?
Basically 40 billion, because 20 times 2 billion, let's call it 42 billion, something like that.
Right? You're going to pay that much? Seriously?
Well, here, Chris, for the valuation stuff, even though that I get like how you're coming from it, it seems like there's demand for AIP at an unprecedented level, and they're not bullshitting us. Like the numbers are real. So I'm not saying it's an NVIDIA story, but why do you factor at all the kind of idea that sometimes you just pay a little bit more and you hold on if it's just going to grow that much over time?
There's better opportunities, man. There's really a lot better opportunities out in this market right now. I don't want to park capital in a place where I don't see the opportunity. I think it's dead money. It's going to waffle between, maybe if it gets to the lows, between 14 and 12, and then it'll recover back to the 20s again. And it's going to waffle in between those two for the next maybe like 3 years.
Wait,
you're going to see
that free cash flow should go,
at the most, it'll go to maybe $30 in 3 years. But no,
Palantir is not Lego my ego in the fucking ShopRite, okay, or Walmart. Like
listen, whatever you want to believe. If you want to believe it or not, even Dan Ives gave it a $24 price target. Those are 1 year price target, and he's on the high end of his price target cycle. So all I'm saying is don't overpay. So anyone tomorrow is looking to buy, oh yeah, let me buy it at $20. All right, sit on your dead money for a couple of years, man. Maybe you'll get a couple of dollars here and there, an additional return. But no, it's not valued fairly right now. At $20, it's not. At 14, 12, it is.
Can I just ask what the guidance was for this year?
2.685 billion. So basically 20% year-over-year growth.
And 800 to $1 billion in free cash flow. And look, this company could easily go up and then come right back down when people take profits. I'm expecting it to. But at the same time, while there are other opportunities, Palantir has a hidden opportunity with market psychology. It's in the right place at the right time. We're all seeing what's happening with NVIDIA. We saw what happened with rule breakers with Tesla and Amazon. Amazon's never traded at a realistic valuation. I'm a long-term Amazon shareholder. There are companies that break the rules. Palantir could get caught up in a lot. And look, the bottom line is that this is a company that has the potential to be generating 3 to 5 billion annualized free cash flow in the next 5 years. And at that point, a 20-time multiple, and that's 100 billion market cap, and this is never going to trade at a 20-time multiple over the next 5 years. I mean, Tesla right now is trading at 130 times free cash flow. Like, I'm a valuation person. Like, I hate paying more for a company than I think it's worth. But I think that there's so much adoption that's going to come from AIP and their other products that this is going to be something where I'm seriously considering selling some stuff to buy more if this sells off.
This is a perfect stock to trade, not to invest in.
Really, Chris, right now, dude? Really?
Yeah. It's for the next 2-3 years. Yeah, I think right now it's just gonna waffle, man. It's gonna get back down to the 16s again, and then it'll go back to the 20s and 16s, 20s.
Let me pose the question this way. Hold on a minute, Chris. Do you think, because I have a very long time horizon, like I have no problem sitting on capital for 10 years. Doesn't matter to me. Do you think that this could have a Salesforce arc in a decade?
It could. It could. I'm not even contesting that. The only thing that I will openly contest is that the market right now is saturated with opportunities.
Yes.
Why would I want to sit there and try? We are going through a seismic shift in high interest rate environment to low interest rate environment, which means there are so many companies are being valued based on a high rate environment that will go crazy high when you get a low rate environment.
Dude, we're going through a
Palantir's
seismic
not
shift
one
with
of them.
AI as well. AI is a seismic shift over the next 5 years.
It could be, but right now a lot of things look bubblish in that sector. So I'm not exactly going into the moon on that one. I think from a valuation perspective, if you're a value investor, there's plenty of opportunities right now, and not Chinese companies. I'm not talking about, oh, there's Chinese companies for valuation purposes. I'm talking about good US companies that could do exceptionally well. You don't have to go hunting for growth and execution. You just literally, the Fed just has to cut rates, and these companies will naturally gravitate to higher prices. Why would I want to give that up to speculate on 10 years? You know what I mean? If anything, I can wait out the next couple of years, make my money, and then if I really feel like it, throw some money at Palantir and say, hey, maybe things will happen in the next 5-10 years. But as far as I'm concerned right now, there are just so many great opportunities in sectors that I know are going to do well, because fundamentally they're structured to do well in their lower rate environment, which, by the way, is coming. It's not even like oh, will interest rates go down? No, it's a certainty that interest rates are going down by this year to a certain degree, and then by next year to a certain degree. So why speculate on Palantir? I don't understand.
But Chris, one thing. So if rates are coming down, and that's going to be beneficial for the entire SaaS ecosystem and sector. And
no, I didn't say that. I didn't say SaaS.
That's my claim. You can respond to that. My claim
I'll
is
say that it will be beneficial to SaaS because companies will be more inclined to borrow capital at cheaper rate to expand.
Yes, and let me say one more thing. They did more than $500 million in 90 days off of AIP. Like, for you to say that you think it's kind of like a whatever, it's like, dude, no, 600 million in 90 days on AIP, 100 deals. That's not a joke, right? Like, at some point we have to be like, companies are willing to pay. It's not fake, not cooking the books. Like,
I agree with both of you. Like, I agree with Chris. There's a lot of opportunities out there, and that's why I'm very diversified. But at the same time, I'm more than willing to sit on Palantir for a decade because I'm fine locking up capital for that long if I have conviction. It's the same thing with SoFi. Like, SoFi could go to 4, and I'm just going to buy more because of my conviction in it. Don't do what I do because, quite honestly, I can lose that money and it'll sting, but I'll be okay. Like, I had my portfolio situated in a way where I am very diversified. But yeah, there's a lot of opportunities out there, and the falling rate environment's a real thing. But I think something that everybody needs to really take into consideration is the market got too far ahead of itself with pricing in too many cuts. We're not getting 6 cuts this year. Not happening. Like, I really hope everybody is done with this freaking idea that Powell is cutting 6 times because.
Well, let's transition to that formally. Let's talk about Powell. So Powell's on 60 Minutes. 2 things stood out. Number 1, he said, we need good data. It doesn't have to be amazing, but it just has to be good enough. Number 2, he said bank failures like 2008 are probably not going to happen. Stocks were red today because he basically said March cut, get it out of your dreams. Chris, what were your raw thoughts on Powell?
Well, first, let me just address them in the chat. Everyone's like, Chris is a swing trader. I'm not a swing trader, but I am looking for opportunities that will present themselves and actually make a crap ton of money long term, right? So I am always looking for opportunities. And sometimes these opportunities get highlighted and sometimes they don't, right? I saw opportunity in Palantir when it was at $8. I wrote it up with you guys to like 12 something and I sold. I did the same thing with SoFi. When SoFi was at 5s and I bought in. But when it got to the $11, $12 mark, I sold. That's... Look, it's not my fault, but it's not my fault that these companies go way beyond what the price range should be, in which case it's stupid for me not to sell it.
Yeah,
right?
Remember, Chris has a talent to swing trade. And I don't even know if swing trade is the right word for what he does, but he has a talent to make money.
I'm a swinger, not a swing trader.
So people shouldn't get on him for that because it should be celebrated what he does. Because a lot of people aren't willing to take the risk that he takes, and he's right more times than he's not. So nobody should get on him for that. Should be
dude. Everyone in the chat needs to calm down about Chris's style, dude. He finds opportunities, he rides them out for a couple years, and he makes a fuck ton.
There's nothing wrong with that.
Like, it's not that serious. Some stuff he's long. If you invest in Palantir, I would assume when Chris takes a position, it's multi-6 figures, right? He's not playing around, so he's not going to lock.
We don't need to discuss anything.
Yeah, he's not going to lock up that much money if he doesn't see the opportunity. So, all right, Powell, thoughts, Chris? What happened?
I mean, okay, so once again, I think Steve was right on this one. expectations have this habit of running way further than what reality calls for. And when that happens, the market eventually will correct. Similar to Palantir, where the expectations go way beyond what the gravity and the reality is. And eventually reality will hit you in the face. So right now, all these people that were saying, oh, March cuts, they're baked in. We're gonna do March cuts. And I'm sitting here, I'm saying, look, man, there's no way in hell they're cutting in March without some sort of credit event that's astronomically crazy enough to get the Fed to move. Right now, with a strong economy, with a strong labor report, the Fed would be stupid to start cutting right now. All they would do is throw gasoline on the fire and then reaccelerate inflation later on. So I think a lot of these people that came on CNBC, they led people into the jaws of fucking pain by saying that, oh, they're going to start cutting in March. And so a lot of people's expectations jumped there. And then on top of it, you had the CME tracker also highlighting this increase because of all the sentiment. And now they all have to backtrack. They have to backtrack it down.
Where are they at?
15%, dude. Went from 70 to 15.
Go to December. Let's see where they have the year finishing at. At least they changed a little bit, but they're still crazy. So, like the market's pricing in too much. And
yeah, you're right.
All right. So forget about what happened last year. You are not going to get cuts because of exactly what KRIS said, but they have to cut this year. And the reason is because of the amount of debt coming due, one, and two, how much the United States government pays interest on our national debt, which is more than the military-industrial complex budget. It is a problem. So they're going to cut. And people need to stop trying to read in between the lines. Powell's the straightest shooter you're going to get as a Fed chair. He's not screwing around. He said higher for longer and meant it. He said data dependent and meant it. He has not wavered at all. Everybody's trying to read between the lines. You're going to get 3, maybe 4 at the most if it's on the back end of the year and debt starts coming due. Because the last thing that he wants is a crisis in the banking sector, because if commercial assets start getting turned in, regional banks and thrift community banks will have a hard time with it. And they do not want these banks to have dead assets on the books that they need to sell for pennies on the dollar and recognize losses. So he's going to walk a very fine line. I mean, 4.6% this year, 3.6% next year, 2.9%, 2026 is what he said. He'll probably be somewhere. It's hard to forecast that far out, but at least for this year, that 460 bips is probably where we're going to be. I don't see him feeling pressure from the administration. I just don't. Otherwise, we would have already got cuts.
So, Carlos, go ahead. You got it. You're muted, Carlos.
I wanted to ask you about this quote from that same interview, but then also just going back to Palantir. Have any companies that are using Palantir now reporting the revenue boost in their earnings calls?
Yeah. So Tyson actually, it's ironic you say that.
Like saying
Tyson
saying company doing well on their earnings, saying we did well. Part of what we did this quarter or over the last couple of months, we implemented Palantir software and blah, blah, blah. We've seen this and this on our bottom lines.
Yeah, Tyson talked about ontological knowledge graphs today in their earnings call. I'm going to put a tweet in the chat. You guys can read whatever.
Those are my favorite kind of graphs, the ontological.
My guy Bayray, he posted this. He read the Tyson earnings call. It was a really good tweet. But on top of that, their average revenue per top 20 client went up 14%. So it just means that their clients are, doing well if they're willing to.
So their top 20 clients average revenue increase attributed directly to Palantir was 14%.
Correct.
Interesting.
Yeah.
And then the quote from Powell was, he was saying, some smaller banks will have to be closed or merged out of existence due to losses tied to the falling values of properties across the U.S. that are suddenly worth much less due to our elevated interest rates and the effect of the pandemic.
Yeah. I mean, overall, I thought it was pretty bullish, dude. I get the market's red, but he basically said, we don't need data that's like even that good. It just needs to be decent. And we just need to keep seeing data come down. And KRIS is right. We know it's going to keep coming down. So he's going to be aggressive near the end of the year, maybe, or maybe he's still 75 basis points to the end of the year. But we're going to have inflation closer to 2% by October, November. And if that's the case.
And how screwed up is this? People are pissed off that we didn't get a rate cut when we're adding jobs. I would rather everybody be working. Like, what is wrong with this picture? The economy's doing good. The market's doing good. Companies are generating earnings. I would rather Americans have jobs. Why are we wishing for rate cuts? That means people are getting laid off and losing their jobs in the masses.
Yeah. Yeah, that's fair. All right, let's move on to KRIS, you can say one more thing on this and we'll move on to Tesla. Go ahead if you want to.
Yeah, my thing is, believe it or not, I'm going to take a step back and just say I do see rate cuts helping actually with deflation now, or disinflation. And the reason why I say that is because the last bastion of inflation is stuck in shelter. And shelter, as you guys know, is lagging like crazy. If you look at the interview, he said, we know rents are going to come down, but the data it's not going to reflect that just yet because of just how rent works. When people sign up for the rental agreements, it's usually a year out, right? So the immediate impact of leasing rates is not going to show up in the data right away. So it's not like, hey, inflation came down, can I get a rent discount? Usually you have to wait until your lease period ends before you can ask for the discount, or the leasing doesn't go higher. So a lot of that data is going to come out throughout 2024, which is good because shelter is the one thing holding things up. Now, here's the other thing. The way that the perception of how they calculate shelter costs is by something called owner's equivalent rent. Right now, owners think that they're like, you know, they can get whatever they want in the open market. That doesn't mean that that's the reality, but that's how they feel about it. The thing is, what you're starting to see is actually the price of homes coming down. I don't know if you guys have been tracking the median, the amount of, the median days of housing in the market, like how many days it's on sale. That is going up, which means that there isn't as much demand for shelter as people think. And the other thing is, at the same time, multifamily construction is crazy right now. So a lot of those units are coming online. So I think we're headed into a regional shelter deflationary cycle where you're going to see underperformance of inflation in the shelter category for the next 5, 6, maybe even 7 years. Right. I think a lot of those price increases, those gains have already been priced in. So now we're going to see is this year on year of underperformance, which should help keep inflation pretty tamed for the next 5, 6, 7 years. So I would say when the Fed starts to cut interest rates, a lot of people are thinking, oh, that just means that the buyers are all going to jump in the market at the same time and just buy up every single house that's out in the market. And I think that's the stupidest thing ever. I think what's going to happen is people are going to hold off on buying homes because they're going to say, well, look, the interest rates just went down this month. I'll wait another month for interest rates to go down even further. Hey, I'll wait even lower, further to go down. And the expectation is that waiting thing, that waiting game, it's that mind and that psychology thing is going to wane on a lot of buyers. And at the same time, the sellers, because they do want to buy another property, are going to be more inclined to sell what they have, and they're going to discount what they have to sell. Also, there's a huge demographic shift between baby boomers and this new generation of millennials, who are, by the way, one of the most debt-ridden generations, and family formation is super low among this generation's cohort. If you think about the generation before, they were having 3, 4 kids. This generation are barely getting married. So you're telling me a 6-bedroom home is going to be bought by a person who's single, unmarried, and is working a job where probably a third of their income is going towards repaying debt and student loans? Like, it makes no sense. So I think it's going to be a little weird. The entire economy is going to be very weird for the next 10 years. But I think we're going to hit a deflationary cycle. So
Chris,
real quick, Steve, before you talk, let me just give a shout out to June. She's an OG supporter of the channel. She said she got a flat tire 1 mile away from home in the rain. Just left my car there. June, I hope it's okay. Sorry, that sucks, dude. That sucks.
I'll show you. I'll show you someone who won the worst day ever today.
You had the worst day ever today?
No, I'll show you someone who I know who won the worst day ever today. I'll cover his license plate. That's my buddy's Tesla.
Ooh.
He was driving home, and in the HOV lane, hit that like white, the white concrete, the hard concrete, hydroplaned, jackknife, went right straight into the wall, totaled this Tesla this morning.
Okay,
Be safe out there, guys.
let's transition to Tesla.
Just one sec, Chris. You know what we should do? On the 22nd, Starwood reports earnings in the morning. If you're able to, we should stream it and react to Barry, because he's going to have the best commentary on everything you just talked about. It'll be interesting to see what he says.
I think Barry is trying to screw over the commercial real estate market so he can buy up as much of it as possible. I know him. I know him going on these interviews on CNBC and shit. This dude has
He's a savage.
Wait, hold on. You guys are talking about blueberries or strawberries?
No, Barry Sternlich.
Oh,
yeah.
Okay.
Hold on. You know who Barry Sternlich is?
Yeah, I know. It's a fucking joke, dude. You're supposed to laugh at that. Goodness. Go ahead.
Yeah, Barry Sternlich is probably going to come out and give like the doomsday report, like fucking Ackman. And at the same time, he's got all his special servicers getting ready to just buy up everything possible. No, man, I don't trust a word coming out of his mouth. You got to listen. You got to be very careful and listen to these guys when they get on CNBC, because they say one thing to scare the shit out of the market and they're doing something else on the side. So right now, you're seeing a shit ton of PE firms lining up capital to do what? To buy up all these properties on the fucking cheap. All right. So I don't trust a single fucking word this guy says, but okay.
Chris, you an investor in Starwood?
I am not. Not right now.
Okay, we got to transition to Tesla.
Moving on to Tesla.
Did they not? Okay, go ahead.
Tesla. Wall Street Journal puts out a hit piece on Tesla yesterday. He does drugs with board members. We'll talk about that. Even Jim Cramer today said this is ridiculous. He has no idea why the knives are coming out for Tesla this hard. Tesla's stock drops. I think it recovered back to 180, but it fell to 176 today on that report, and then probably some other macro stuff. Chris, you tweeted that there's something going on with Tesla. You also think 150 is the buy range. So 2 questions for you. Why is the media attacking him this much at this point? Any theory from you? And second of all, when do you finally DCA into Tesla?
I think, number one, Elon is a threat to traditional media and how they report. And there's a political angle that I just don't understand it, to be fair. But it's there. It's a left-leaning bias against Elon that keeps coming out. And the reason why I say that is because these drug things, this is not new. This is from 2021 and 2022. Like, if you look at every article that's come out, these are stories from 2.5 years ago, right? This didn't happen last week. So if you look at a lot of these headlines, they're very misleading. Like the Post put out a headline, I think today, I think, saying Larry Ellison offers Elon Musk like a safe space where he can detox or some shit like that. And it's like, that was like 2 years ago or 3 years ago when the first report came out, and they just wanted to get that out of the what is that thing called? Out into the world. So number one, I think everyone is trying to make Elon look like he's a crazy drug addict lunatic. And that's one of the ways that you can tell that the media is against you, is when they call you crazy and get people to believe that you're crazy. Just like they did with Trump. They said, oh, Trump is a Russian asset. But every piece of Dave Chappelle, right? They said, oh, he's crazy.
Crazy, yeah.
You know, I was like, no, these people aren't crazy. They're just not thinking like you're thinking. So, you know, it is what it is. I mean, that's what the media does.
So when do you buy? Yeah. When do you buy?
150 and below. I think there's a couple of major. Well, number one, the interest rates are still too high, which means that demand for Teslas is going to be somewhat waning. Car buyers in the United States buy based on, a lot of it is based on the availability of credit. Availability of credit is not very high for current buyers. Like, I'm in the market to buy a home right now. Okay. I mean, I am buying the market to buy a home, but I'm also in the market to buy a car. And I looked at multiple cars. I looked at dealerships, and I looked at the financing. And I'm just like, no, doesn't make sense. I'll wait. I don't need car. Like right now, if you go to get an auto loan, even with excellent credit and a good amount down, you're still going to be paying 7-8%. Why would you want to do that? So Elon and Tesla, majority of their business is still coming from cars, which means that auto sales are going to be impacted. At the same time, you also have China, which is slowing down and they're having their economic problems. So that means that right now, China, which is a very large market for Teslas, is also going to be impacted. So this doesn't mean that Tesla is going to sell less cars than they did last year. It just means they won't be selling a lot more cars in the future, which means that 50% year-over-year growth rate is no longer going to happen. So why would you value a company based on a 50% year-over-year growth rate? You wouldn't. So right now, I think
KRIS, bot isn't part of the thesis. FSDs, like, I think you're right on this. I talked to a bunch of people today. The valuation,
that's all nice, but that's all future revenue, man. That's like 5 years, 10 years out into the future. You don't even know how successful it's going to be. Like, these are things that are nice
right now. It's a fucking car company now.
Yeah, these are nice things, but yeah.
Oh, well, Steve, Steve, but you turned bullish now, so you can't say it's a car company anymore since you turned bullish.
I've still said it's a car company. I'm buying it for different reasons, though.
Okay, so Steve, let me ask you the question, then we'll get to Carlos. You're buying it for the bot. Obviously, the market doesn't give a shit about the bot. They don't give a shit about whatever other stuff Elon's working on, Neuralink, whatever. The automotive business, they feel, is going to struggle, as Chris described so eloquently. And if the S&P has a 5% pullback,
there's one other thing too that I guess if you want, Steve, go ahead. But I'll tell you, gas prices are low also. Usually, if you see gas prices start to rise into like the fours, maybe $3.50, $4 range, that's when you'll see a demand for EVs pick up. And Tesla, being the number one EV, will benefit from that shift also. So you're not seeing that right now. You're seeing gas prices tamed, so the consumer is less inclined to go out and spend money on an electric car. Sorry about that. Go ahead.
No, I'll just finish the one thing, then Steve, you got it. If the S&P has a 5% pullback, which is just, it happens throughout the year, and Tesla's at 170.
Even Tom Lee said, listen, even Tom Lee.
Yeah.
So we might touch 5,000 and then
we hit that 440. Yeah. I mean, the Tesla's going to $100 if that could happen. I mean, theoretically, that just pure math. So Steve, what is the thesis right now to DCA into Tesla and not wait for better prices?
Yeah, look, I can't predict bottoms. I can't do it. And after seeing the bot and really looking into some of the other things with Tesla, I am bullish on the next decade. This could very easily go sideways or go to 100, 125, that area. And unless Elon leaves the company or something drastically changes my mind, I will just keep buying and DCAing into it because I think there is a very long-term opportunity, but this could be dead money for a while. The bot, I think, is going to be bigger than the car business. I think that Tesla is going to be a leader in the robotics industry. Just like we talked about last week, it'll start in commercial before it goes to consumer. There's going to be a huge runway, and this is a global aspect that can change how businesses run back office services, especially when you have AI embedded into it. I think that they're going to license FSD whenever the hell it comes out, but I don't think this is going to happen for 5 to 10 years because even if Elon comes out with an update that has perfect FSD in the next 6 months, you still need government regulation. I will not be allowed to sit in the back seat and read the newspaper until the government gives it full clearance. That's when you'll see real adoption on FSD. And I think the real secret sauce in this is them being ahead of so many other companies and licensing it out to Ford, GM, maybe not Mercedes, but at least those two, Chevy, and then superchargers. If we really do see mass adoption in the sub 25,000 range, and if they're getting a spread on their supercharger network because of the global adopter, there is a very big opportunity here. But a lot of things have to go right. And it's one of those things that if they go right, I think it's worth me locking up capital for a decade because of what the TAM is.
Carlos, your thoughts on Wall Street Journal hit piece, Tesla stock valuations? What are you thinking?
I got a couple of things to say, and I've got some things to say that probably won't be very popular and may even seem out of character for me. Okay. Just because there's been a lot. Steve, the FSD legislation is not as big of a deal as you think. If Tesla can prove to the regulators that their cars are, say, 1,000 times more safe or 100 times more safe, the regulation will pass. And you already have sandboxed areas in the country where it happens. And so it's not going to happen across the entire United States. It'll be region by region, state by state, and then eventually it'll go.
Yeah, and it's federal and local, so there's multiple layers.
But there's multiple layers. But again, all they have to do is prove to them that the vehicle is safer, and the data is already there, right? But you still need, they're still calling it, say, supervised self-driving. But I just want to go back to something that we spoke about a couple months ago. Can you just share this real quick? Because this is what I think is happening, and I think it's to Chris's point. I just want to play a couple of seconds of this because this is what I think is happening. I'm going to play it a little faster. This is a Mike Benz. He used to work in the government, very, very high level employee at a certain point. If you look at his bio, he used to be the former State Department cyber author of Unpunishable Weapons of Mass Deletion. Okay.
The people of
He's put up this post on December 4th, and he was saying, beware of the regionalization of the conflict against Musk's assets in the attempt to corporate regime change him from X.
China, we're going to regime change the CCP. We have nothing against the people of Iran, we're going to regime change the Mullahs. We have nothing against the people of Venezuela, we're going to regime change Maduro. This is the common thing, is it's not necessarily a war on the platform. They just want to be in control of it. That's what it is, simple as. Now, because of that, because the goal is corporate regime change, overthrowing sort of the internal government of Twitter, they are going to regionalize the conflict as much as possible. Now, this is something we have not yet seen, and part of this has to do with the sort of unique reliance of the U.S. government and on Western commercial holders on the fate of SpaceX and Tesla and other Elon Musk properties. But my concern here is right now this ad boycott is an existential threat to the profitability of the company. And the company appears to be shifting into.
So this is you can find it online. His point, this is when the ad boycott came out, and his point was, if Twitter finds a way of staying profitable, if the ad boycott doesn't work and they find a way of staying profitable, say without selling Tesla shares, then you'll start to see ancillary attacks on Elon, his character, and most importantly, attacking Tesla stock, which then puts pressure on Tesla shareholders, and they will then create their own FUD. I think Chris is right. What you're seeing now, I mean, if there's ever been any one person, one CEO more attacked than anyone, I find it hard. I find it hard to think of anyone that has been more attacked than him. And I think that this is a proxy play, all because we're in an election year and Twitter is an existential threat to controlling the narrative. Now, that being said, I don't know that this is where it starts to get like, I might say some things that are unpopular. I don't know that Elon can win this one. I think he's been sort of bulletproof on a bunch of these things, but I don't know that he can win this one. I watched if you haven't seen Warren Redlick's latest post, he did a post about this. He said a lot of great things that got me thinking, and I agree with him on a lot of these issues. Because now we have a precedent of companies incorporated in Delaware where the courts can overturn the votes of the shareholders. Even if he goes back and they vote in a new compensation plan, it's not to say that the courts can't strike that down. But in the meantime, that could take several more years. And is Elon going to wait around to have his next compensation package be shot down? Or is he going to willingly step down as the CEO of Tesla and start these AI businesses at another company? That is very well possible. And Warren Redlick was showing some interesting movements that Baglino has been making, what's his name, from Tesla, moving some shares into a trust. And he was making a case that he believes that pretty soon we might hear Elon Musk actually step down and put Baglino in place because he's one of the employees that's been there the longest. It won't be the same, but the company will still be able to fire him. They might give him a chief product officer or something like that.
Let me ask you this question, Carlos. Has Elon done anything in the past couple months, like say he'll leave Tesla and take all of his intellectual property if he doesn't get voting shares or anything that could attribute to the decline in the stock? Or do you think it's more so mainstream media?
This is completely a mainstream media. This is what I think. This is a mainstream media attack on Elon Musk to get to justify a sell-off of the stock that then makes shareholders angry. And you get guys like Ross Gerber coming up there that add to it and basically want to put pressure on Elon Musk to comply. It's essentially a compliance test, trying to use the failure of the stock. That's what I think it is, because we've known what Tesla's fundamentals are. People that are in the stock know what they're buying. They know that they're buying an incredibly volatile stock. They've been very clear about what the roadmaps are, their milestones, their hurdles, et cetera, et cetera. So I don't think that all of a sudden people woke up tomorrow and said, you know what, Tesla's not worth 220. It's only worth 180. No, it's worth 170. Yeah, it's maybe worth 150. You know what I mean? I just, to me, it seems like that's what's happening. It's so that guys like Ross Gerber can go up there and say, yeah, that's right. He does do drugs. He's this. He's not fit. It's the same sort of psyop that you see when you have people that threaten a lot, when you threaten other powerful people or other powerful forces. And this is what got me thinking about it. I'm like, any company that does really well, it hurts someone. You're either going to hurt your competitors, you're going to hurt some legacy business that has to go away, etc. And I think a lot of Tesla shareholders feel really good that like Tesla does no harm, but Tesla is about to do a lot of harm. And unfortunately, Steve, I started thinking about the bot. The bot is going to be an absolute. It's going to.
You're going to need UBI at some
It is going
point.
to be such a, here's what got me thinking about it. And this is something what people say, I don't criticize Elon. He posted a video of the bot folding clothes and he said, whatever. Then you find out later that it was somebody using it by remote control. Completely dishonest. I don't think he should have done that. But the fact that someone can control the bot by remote control made me think about what happens. What about if you just sell that as a service? You put a bunch of robots in your facility and you have a bunch of people working overseas and you can hire them say at sweatshop rates to control bots in the United States. That's something that would be completely possible over the internet. You already have people flying drones for the military while they're sitting in Washington, right?
And Carlos, from a risk mitigation perspective, that could become very popular.
Yeah,
because
at least maybe initially.
Huge insurance premiums, and insurance is one of the
Mhm.
biggest costs of a business.
Mm-hmm. That's what I'm saying. So even if the bots aren't fully autonomous, if you just have people controlling them remotely and you switch them out in the same way that I, go in and out of an editing software, it is going to be incredibly disruptive, and it is ultimately going to hurt a lot of people. What this got me thinking about is that the Elon's might not win this case, and that, or even if he does win the case and they appeal and they go back and forth, he might make him gun shy about a subsequent compensation plan, even if they change things up on the board, even if they move and reincorporate the company in Texas. It's with no precedence, because there's almost no major companies are incorporated in Texas. There's not really any legal precedence to how that thing would go. I think what he wants is he feels that AGI could be an existential threat and he needs to control it. And I think that feeling in him that it's really important could have him leave Tesla in order to ensure that he can work on AGI at XAI.
Chris, why are you laughing? What's happening, Chris? Why are you laughing? What's going on?
So I was just thinking of something. I went to my wife had a wisdom tooth removed, so she really wanted like a milkshake because she hasn't been eating solid foods. And so we went to Chick-fil-A, and I was like, the entire car ride, I was gaslighting her. I was like, I heard Taylor Swift might be a transgender, and she just freaking lost it in the car. And for some reason, I just keep thinking about it now.
So I'm like conspiracies and stuff. So you're getting
yeah. So I'm like, you ever seen her facial? You ever see Taylor Swift's facial structure? It kind of looks manly, and she's really tall, right? And she's like, no, she's not transgender. I was like, what, do you hate transgenders all of a sudden? What if she was a transgender? Why is that a problem?
No, the conspiracy theory with her is that she's like a reincarnation or whatever of that Satanist's
or she's a lesbian. I was like, look, or she's a lesbian.
I will give you this. She looks like that guy's daughter. I will give you that. I've seen that thing. She does look like that guy's daughter.
Exactly like that. Yeah.
Okay, so to wrap up the Tesla thing, essentially, do you agree, Carlos? 150 is when you start buying more, or like how do you think of that?
Well, to go back, what I've outlined, I think would happen this year, and if that happens, I think Tesla stock gets cut in half the next day. If anything, and here's the thing, even if and I think this is what the powers that be wanted. Even if Tesla's stock compensation plan is reversed and they win the appeal, I do think that it's going to be spun as Elon Musk is costing shareholders $55 billion, and that also will tank the stock. So I just see there's just too much weight on this stock right now, where unless they have absolute perfect numbers, and even if they have perfect numbers, they have to be beyond perfect numbers. I don't see anything that's going to be pushing this stock up anytime soon, especially this year. I think after this year, and we'll see how it turns out with the election. I think it'll be fine. I think they'll back off, but especially during this year, I think this is just the beginning. This is not the end. And these sorts of attacks will continue to come. And the environment that Tesla's operating in
I have the perfect
solution.
I have the perfect solution.
Hire Beyonce? to do
No.
your earnings calls?
No, call Taylor Swift agent, because that will give you instant Swifties, bro. Anyone attacks Elon,
Call her what?
Swifties will go after her.
What?
Go after him.
Call her
Well,
Asian?
I gotta
agent,
go.
agent.
Oh,
Call
See you
Taylor
guys
Swift's
later.
agent. Imagine Elon dating Taylor Swift.
Oh my
Dude,
God! Now
the
we're at this.
internet would be on
All right,
fire.
Steve, if you
oh,
gotta
the
go,
stock
that's
would
fine.
go to, the stock would go to 350 the next day.
Let's do 2
Yeah.
minutes on this. Chris, make sense of this. Nvidia's up another 5%, 6%
I'm not
after
going
hours.
to. I'm not going to.
It's at 702. Justify it.
I'm not doing it. I'm not
Should we
doing
buy
it.
puts? Should we buy puts?
No,
Hmm.
never. Right now, you'd be throwing your money into we're okay. Stanley Druckenmiller broke this down very easily. Usually, these bubbles go on for 3 years. Okay, so we're in year 1.5 right now. Not even 1.5. I'd say 1.25 right now. So not worth it. I think we still got a little ways to go. I'd say maybe at the 2.5 year mark. So if you think about ChatGPT, October-ish, eventually the bubble will pop, but it's going to be a long time. I think I wouldn't short NVIDIA, though. If there was a company that I would short, it's SMCI. Because
Tell me.
at
Tell me
least
why.
with
What's going on?
well with
Stock was up
NVIDIA,
15% today.
yeah, and it's up in the after hours too. So this is what you call crazy hype. So just do a 6-month chart. And believe it or not, I called SMCI being one of the most undervalued companies last year before people were talking about it, not this year after people were talking about it. I said a year ago. The problem is this: they are a hardware company with hardware margins. Okay. All of this future growth, I think there's so many people looking at the top line and saying, oh my God, this is the growth story of the decade. And this is the next Tesla. And it's like, oh God, this is going to be interesting to combat. But so right now, their growth rate is phenomenal. Everyone is spending money on CapEx like there's no tomorrow for AI, because AI is a real thing. The problem is, at what point does the growth rate become unsustainable, right? And especially if you do comps against the companies that they traditionally compete with, like the HPEs of the world, the Dells of the world, server hardware is not like a high margin business. Okay. Like, yes, the products that they do make specific for AI, it's really good and it's really advanced. I'm not denying them that, but the valuation has gone way, way beyond what the normal range is. The problem is there's no way to time the top. When the bubbles are doing their thing, you got to let them run. So it's like the tech bubble of 2000, right? So anyone buying in at 660, I don't know, almost $700.
Dude, who the fuck is buying this at like? I don't understand how it keeps going up. Is this a short squeeze? There's a 10% short float off 55 million shares, but I don't get it. I don't get how it keeps going up.
Hey, listen.
What's the market?
I don't know either.
Market cap's 30 billion. They're going to do 15 billion in revenue. And Chris, they have like 15% margins, right? Like
7.
This is probably gonna
7.
continue all freaking year. Let's be honest. This is probably just gonna continue all freaking year. Doesn't seem like every year there's like 1 or 2 stocks or an industry that like everyone just nominates as the safe haven for that year, and then the following year you'll start to see the sell-off. At a certain point,
but
it's not going to just keep going up forever.
Now the problem is this: people are lopping SMCI in as some sort of AI company, when they're technically not an AI company. Like the value that comes in this AI ecosystem will primarily go to Google, Amazon, and Microsoft, because they're the major cloud providers. And then like you get all these second tier companies that also do very well.
The users
the thing
of the
is,
AI.
right, and then the applications that are built on top of it. It's never really the hardware providers, because right now the hardware provider, it's just I don't know how to explain SMCI to people, where there is value in this company. It's just not at the current price ranges. But then again, I don't know, man. It's just they also have a shit ton of growth in it too. So I don't know. I don't know when the top is going to be. But if you really want to understand this company, look at a company called JDSU. Okay, they were a darling in the 2000s. Okay, when the .com bubble happened, and then look at what happened afterward. it's really, really hard to say that this company is a bubble when the bubble is ongoing, because there's going to be tons of people that argue against you. And the next day when the prices rides up even higher, people are going to say, see, you stupid idiot, you missed out. But these are the same arguments I heard about Zoom. And I know that you made that comparison on Twitter, Amit, where everyone was like, Zoom is going to be here forever. And it's just going to, no one is going to talk to each other in person. Everyone's going to talk through Zoom. And what happened? You know,
wait, are you talking about NVIDIA or SMCI right now?
SMCI.
I actually think that the Zoom analogy makes a lot of sense. At a certain point, when everyone's using AI and that's just sort of built in, it's just sort of expected. Then what happens? The stock comes back down. The stock comes back down to reality.
Yeah.
I don't think the shorts quit yet. I think the shorts are doubling down because they know this is stupid. And so I don't think we're going to squeeze out the shorts yet.
I would say this to you. At least with NVIDIA, there's a moat. Okay. Yeah. Whether that be technology, IP, software, all that stuff, there is a moat. SMCI does not have a moat. That's the problem. So there are competitors that can make stuff. That's the other thing. So if you think about it, if they're growing this much, you don't think the other companies are like, hey, we need to get on this AI accelerator hardware product mix where we design boards and basically have them accept NVIDIA chips and then put like cooling systems on top of them, specialized cooling systems. No, I mean, they'll make them. And anyone, like I said, anyone paying for SMCI right now is going to be, I don't want to say they're going to get burned, but it's just, you're paying a lot. So.
And then just the last thing before we go, just anecdotally, what have you guys been seeing about the Vision Pro?
Oh, dude, that's a we could probably talk about.
I'm long Vision Pro. I'm long Vision Pro, baby.
Wait,
did you get it?
It's I'm gonna look right now because they just sent me an update about my.
While you're looking for that, let me say I know I've been the most critical about Vision Pro.
Bro,
the videos.
God, I think you're gonna say the same thing. The
videos have changed my mind to an extent about the possibility of spatial computing, which I agree. Like the videos are real for that. The problem is this generation is not the generation. And so it makes no sense to finance it because if you do 12 months or 36 months, it'll be 2 new generations. And then the question just is, do I think people are going to walk around the subway with this on? Maybe.
People
I mean, it looks
okay. I did not expect to see people walking around on the streets of New York with these things on. I didn't expect to see people on the train. I didn't expect to see people actually wearing them. I thought it was going to be people mostly sitting at home playing with this thing. No, there's people walking around and using this thing. And that surprised me. And to your point,
you're using literal oxygen, like literal air, and you're making it productive. Like this box made us hyper productive. Now space, like that was the thing that really got me to think about it. But I don't know if it's going to replace the phone. And if it doesn't replace the phone, it's not another $100-200 billion business.
The only way that it could work. Did you see the video of like 3 people sitting down in the village having lunch? 3 of them had the Vision Pros, and somebody commented under it, not a cell phone in sight, because nobody had their phones. Nobody was using their phones. If there is a way, say like the 3 of us are sitting at a table with these Vision Pros and we can have a shared experience where it's not like you've got your apps floating in space and Chris has his apps and we have a sort of shared space, then I could see it really becoming a thing. I've been, I don't know, optimistically surprised, a little shocked at some of the videos that I've been seeing of how people are using them and how much people seem to really like them. I think Farzad had a great comment. He's like, the more I wear it, the less I find the use for it, but the more I don't want to take it off, something like that.
Well, that's the thing. The less people will find a use for it unless they're using it constantly, and the battery's not there, the heaviness is not there, but that'll get better. I agree with you, Carlos. That'll definitely get better by generation 2. One thing I agree with you, Carlos, Meta is not making the VR a thing. There's no way. Like the way people are interacting with this Vision Pro, they're wearing it on no one is wearing a Quest on the fucking subway, dude. No one.
I didn't
only an Apple product gets you to even try to do that. And I like the spatial computing. That's very bullish on it, but I think it's going to take a couple of generations for it to produce real revenue.
I'm really curious. I am really, really curious, and I'm going to be brutally honest when I get it. If I don't like it, I'm going to tell you guys. So it says it's coming in, I think, a week.
Okay. That'd be really cool. No, you should definitely give us your experience. Yeah, you can use it live on the pod.
Maybe 2 weeks. So the 20th.
Let me just show you guys one thing with regards to SMCI and why I think the valuation is absolutely bonkers. Okay. You can see here that the revenue is growing like crazy, which totally understand. But at the same time, look at their operating margins. Okay, 10%. You look at their profit margins, 8%. All right, EBITDA margin, 9%. These are not great margins. Even if you were able to increase revenue like crazy, this margin number will keep the price somewhat muted. And so if you think about it just from margin perspective, it's not worth that crazy amount of money on the thing. So I'd say this thing could pull back maybe 60% from where it is today. But then again, what do I know, man? The valuations. And the other thing is, this is a cyclical. I think AI, like hardware spend, is going to be very cyclical in that right now everyone is like spending a crap ton of money on the AI hardware because it's an arms race. But like every other arms race, eventually that arms race is going to end. And when it does end and you see this 103% growth turn into negative or even flat year-over-year growth, that's when people are going to say, oh, wait a second, what happened? It's like, yeah, that's what happens. You invested during the hype cycle and now you're stuck with it. Someone said to me, look at Nutrien. Do you guys know what Nutrien is?
No, what is that?
Nutrien is a Canadian fertilizer company that last year during the Russian invasion of Ukraine and stuff, you know how like fertilizer went crazy because natural gas prices went up.
Yeah.
Look at what happened. You saw this giant growth. Sorry, go ahead.
I was just gonna say I thought Canadian companies only made maple syrup. I'm sorry.
They do only make maple syrup.
Canadians only make Republicans.
Yeah. But really now, cool. If you look, the cycle in that market is now dying, and so you're seeing that. Look, the prices are actually coming down. So if you just look at Nutrien stock, like the chart for it, you can see this. Hold on.
You think this could happen to SMCI, basically? The
very easily it's going to happen. I just can't tell you when it's going to happen.
But isn't there also like there's only so many big companies and there's only so many GPUs that they need. At a certain point, they have enough, and then they want to monetize them for a few years before they go and they buy the new model.
I mean,
infinite sales, you know.
So this is where Nutrien ended up at the peak in April 2022, and it's been a ride down the entire way. So, I mean, SMCI is even worse than this. I mean, you look at this, it's just SMCI. You look at this parallel just going up, up, and up. I think a lot of this.
Why do you think it's going up? Do you think it's FOMO, or do you think there's institutions that are legitimately?
These are shit coins. This is literally shit coins. I'm sorry.
You think it's a shit coin, Chris? You think it's like
these are shit coin charts? If you study crypto, this is what shit coins do. And then what happens when they retrace 60, 70%? Everyone seems like it's so obvious afterwards.
Yeah, pretty much.
They're gonna call and say, "Oh, we should have seen it." They'll look at the balance statement like Chris and be like, "Look, here was all the evidence that it was going to come down." But until that happens, people.
Here's what keeps happening. Every time this thing goes higher, these stupid analysts, they keep raising the price target. So it lops in more people. And it's just like, and I think the funniest, let me just show you guys something really funny. Like if you ever trust the analysts, damn it, man. Let me just, where's my downloads? Because I had to, I was doing
the SoFi guy. I think they show that SoFi analyst like on the day of earnings. He said he put a price target of $3, and he's like in the bottom. I mean, he lost his one remaining star.
While we're waiting for Chris, guys, in about in 15 minutes, I'm gonna be live on my channel. So if you guys still want some more Palantir coverage, I'll be live for an hour, 10:30 to 11:30, and we're gonna end this up, and then you can join there. Chris should be back in a second. He just probably pressed some button.
Why don't we take a like and subscribe break?
Yes, please like. We got 670 people here.
Why don't we just take a like and subscribe break?
Please make sure to like. Please make sure to subscribe. If you want more Palantir coverage, I'll be live in about 20 minutes. And hopefully this was some good content around SMCI, NVIDIA, Palantir, and Tesla. He is back. There we go.
So let me
at the end
something really quickly. So this right here, window, WhatsApp.
Chris, you just did that thing where the band leaves and then says goodnight, and then you come back and you're like, "You guys still here? Do you want more? Do you guys want more?
Damn it, man! I keep
Chris is
closing
the
these
star.
damn
Chris is
windows.
the guy. We gotta.
I am not the star. I'm not the
Chris is
star.
the star, dude.
Here, we'll take a like and subscribe break while you do that.
Yeah, go ahead.
Here we go.
Pump the
Full screen.
pump the
Full
channel.
screen.
The stock market. All of us are trying to make some
It's
money.
weird with
They're not
us
actually
watching it.
profitable businesses.
That's what makes it fun here, Mike.
Somewhat
You
predictable.
guys keep glossing over that like it's not important. It is important.
$2 trillion in assets.
Hit like, subscribe.
No, listen.
Ooh, hold on. We got Big Boy in the chat.
I can vote with my dollar.
It's a principle thing. It's not financial.
Why don't you just keep DCAing into the high quality companies and you'll do okay?
Palantir is the most exciting company in the world.
We provide the entertainment. That's what we do here.
Can we ring the bell?
Alexa, activate studio mode. All right.
How many
Can you
people
guys see-
just went off?
Can you guys see my screen?
No.
No,
Here you
hold
go.
on. Okay, so this right here was an analyst report that was done by Piper Sandler. Okay, so these are all the projections that they're making. They're doing their analysis, blah blah blah, all that good stuff, right? But if you look at the charts on Google, right, you can see here. All they do is just keep raising overweight Google since 2021. Even when it was at their peak, oh, it's overweight. Keep buying Google. When it was going down, keep buying Google, overweight. These guys just chase price targets, and that's it, man.
You don't think
That's
these
all
analysts
they
have any? You don't think these analysts have any fundamental analytical reason to upgrade SMCI right now? Like they're just, throwing it.
They're
800.
just chasing the trend. I don't know what their logic is, but they're just chasing the trend, man. Because I mean, when Google was at its peak, did any analyst say, "Hey, I think Google's going to go down because the economy or the macro economy is slipping"? No, it was the same thing with every other major company. With Amazon, oh, there's going to be more capex. Nope, no one said that. Everyone just said, "Oh no, keep buying Amazon." Overweight. There you go. Look, they just keep raising their targets and say, "God, they're overweight." Same thing with Meta. Look at this. Oh, neutral. And then they went neutral all the way here to 88 and they were still fucking neutral. Now all of a sudden they're overweight on the damn thing.
Now they're like Meta
Now-
600, right?
Right. And now they're like, oh, we're overweight to 415. Maybe you should have been overweight here when it actually fucking mattered, not after it's already run up so much.
Yeah,
It's
you
like the
don't go
dumbest
fucking
fucking thing.
obese when the thing is already overweight. Like
You know?
like at
It's
80. But okay, one thing on
Yeah.
SMCI real quick before we end up. At what price do you think it goes back to, Chris? Like, do you think it falls back to 70? Because I think it falls back to like 300 if it does fall. I don't think it collapses.
I think it depends on like the AI market, man. I think right now we're in this giant capex cycle of companies spending a crap ton of money on AI, especially the big guys like Google, Amazon, Meta, and all the other cloud providers. So I think there's still room for it to run further up because it's such a bubble. There's just the perception of it. I think the thing to watch out for is going to be guidance on CapEx spend. Any of these companies, these super majors come out and say, hey, you know what? We over-ordered chips. We over-ordered hardware. We're going to be doing cost reduction in technology next year. SMCI is going to go down like a brick. But until then, every conference call that we've listened to right now, what have they said? Amazon said, oh, we're going to be spending more on technology. Google said we're going to be spending more on technology. Microsoft said we're going to be spending more on technology. What does that mean? That they're going to be spending on hardware and AI chips. So if they're going to buy more chips, they're going to buy all the hardware associated to make the chips work, which is what SMCI is. The problem is all of this growth is already being factored into today's share price. So, at some point, people are going to realize that demand is waning, and then people are just going to be selling it off like there's no tomorrow. NVIDIA, at least with NVIDIA, it's a lot of IP with CUDA and software and all this other stuff. With SMCI, they're purely hardware. So SMCI is an easier short than NVIDIA is. It's just I can't tell you when the top is, and I don't short anyway, so I'm not going to go that route,
Mhm.
But I would say I would caution someone against buying at these prices. I would caution someone against that. Just be careful.
Real quick, just reading off what Kathy bought. Just got the notification, then we'll end it out. Kathy bought 47,000 shares of Tesla, 163,000 of Robinhood. Then she bought another 5,000 of Tesla. She sold 2,000 of NVIDIA. She sold 15,000 of Google. Apparently, KRIS, she has some Google. She bought 13,000 of Spotify. She bought another 9,000 of Tesla, another 37,000 of Robinhood. She sold 21,000 of Zoom. And she bought 49,000 of Ginkgo Bioworks. Yeah, that's it. All right, good stuff. This was fun. Thank you all for being here today. 670 people. We haven't had that many in a long time. Obviously, I think people are excited for Palantir earnings. Hopefully, you got some good perspectives from all of us breaking it down. I'll be live on my channel in like 10 minutes, continuing that conversation. If you want to get some more coverage on that, that's in the chat. KRIS's Twitter, Carlos's Twitter in the description. Please make sure to follow them. KRIS has a Patreon as well, where he's made people a decent amount of money. I'll just say that. So if you want to check that out, please subscribe to him there. I think it's like 15, 20 bucks a month. And that's it.
I think Enphase's call tomorrow.
Oh yeah, I'll be streaming that. Enphase's calls tomorrow. Yeah.
Oh man, we should jump on.
I think they're gonna shit the bed, dude. I kind of think it's not gonna be that good because his rate stuff in March is not happening. So I don't think it's gonna be that good.
I'm curious, when are you going live for that?
Probably like 5 or 4:30.
Oh, they report after the bell. Okay.
Yeah.
Yeah, I want to jump on. We should look at that.
Maybe it's been so depressed that it just jumps on any good news, but we'll see. We'll see what
could be. Well, it's tomorrow 4:30 Eastern, so that's like 1 my time, 1:30. Okay.
Yeah. So I'll send you the link.
Yeah.
You can hop in.
Yeah, I'd like to hop on. All right. Yo, good chat.
Thank you, everybody. Have a good one. We'll see you in tomorrow, 9 p.m. Bye, everybody.
Bye.